All right, good morning, good morning, good morning. Good morning, Brad. Good morning, DJ Mike. Good morning, G Money. How are you? Good morning, Marty. Matthew, good morning. Steven, good morning. Ethan, good morning. Rufio, good morning. And 2 minutes to the cash market open. We're running up here. The market is about to reverse this candle here to 458. 458 is, here we go. We're about to close that candle and we closed it. The market is in sync on the long side. We have a target of 483 as the target for this rotation right now. Pullbacks are buyable, and we have harmony zone number one, which is 433 by 423 and 408 by 398. We'll reevaluate the longs if we break anything under this captain setup. And this captain setup right here, you have a captain setup switch trade. So that whole zone between the 22 to the 08 is going to be a critical support level for the remainder of the day. If we end up trading under it, then the tone of the market will shift and the personality will shift. Okay, so the next target for us is 483. Good luck, everybody. 1 minute. We have a crude oil inventory report today, 9:30 Central. Cash market open. A little bit of a pullback here. Just give me a second. So we hit our target. I mean, I tried to update the indicator in the middle of the open here. So that's why my screen to right hand side screen is I know, and it's pausing, so I'm just gonna have to leave it alone and let it work itself out. But target is hit. Yeah. Good morning, Adam. How are you? There we go. Calculate, baby, calculate. It's 5:08. Holy crap. Yeah, I moved very quickly. All right, here we go. Here we go. It's catching up to all of this stuff. Next target is 533. 533, next target. Now, what we're going to be looking for also here is harmony zone number one and two, 83 by 73 and 58 by 48. Pullbacks are buyable. We'll reevaluate the longs if we break anything under 460. as fast and furious. Retesting for harmony zone number 1, and that came in super fast. The market is out of sync. And they're trying to protect that 60, but that's just a fast price action here. Here we go. What will get us back in the long on a swing trade basis is 96. A break to 96. Yeah, we're getting there. See, that 60 was very important. All right, 96. So now we're back in sync. Pullbacks are buyable again, but boy, is it fast. Just target is 533. Yes, sir. That's what I said. Let's take a look at ES. ES, they produce a captain setup switch trade long. Broke into a target. Next target is 53.41 and a half. Pullbacks are buyable against that structure with a stop under 53.25. And we're looking for these retracements to buy into. And ES is strong. It's strong in relations to NQ. You know what? Yeah. Oh boy, look at that. Look at that, and that's for G Money as well. G Money, take a look. Captain set up long on ES on the 50 NT Rinko. That's a massive buy signal right here. Okay, so you want to see the opposite of it. Captain set up short. The market did with a switch trade, which even make it a better signal right here. So these signals, whenever you see them, we should expect a swing trade and a move upward or downward, depending on how the captain setup is structured. So we got another run here into harmony zone, into the target. The next target after that is 53.47.75, and this is a breakout that could be faded. Let's not get too excited about all of this. They tend to do this. See this breakout? Faded. Okay, so they trap a lot of people here. I mean, it's nice right at 53.04. You're at 53.40. Okay, but that formation or captain setup on the big candles like a 200 NT Rinko 100 or the 50 on ES are critical big movers. Target is hit. Next target is 558. 558. We'll reevaluate the longs if we break anything under 800, and we have a critical level at 90. Pullbacks are buyable. Target 558. ES target is 347.75. They're buying the dips. Let's talk about the different traders that we're facing today. Um, Anybody that is fading these moves has limited success. So the trader that's feeding this motion right now, it's a trader that's trying to short into these run-ups. Unless they're a surgeon and they're just hitting it right on the money, they're getting swept up in this short covering behavior. Okay, they're getting pockets of sellers. I mean, that's just one of them right here. But ultimately, the trend is long. The pullbacks are getting bought, um, and I'm better off looking that way. $13.03. Okay, 03. $98. Yeah, it's a fast one. Here we go. So the market is out of sync here. You have the 200 and the 100 are out of sync, and we're looking for. You're getting two pockets, longs and short. I'd rather be on the long side till proven otherwise. And how would that look like? That would look like a break below 73, 473. Then the rallies are making lower highs. Okay, if the market does that behavior, then I will shift into no longs and just waiting for a bit more confirmation on the short side. But that will be a personality shift into this market if that behavior happens. Okay, because I'm seeing a little bit of the sellers are stepping in and they're starting to be a little bit more forceful here. So they got it to 75, not 73, and they boom rallied that thing quick. They're defending. I mean, a little bit of technical damage happening here, but the longs are not completely done. And you could tell from the speed of price action how when they sell it, I mean, like they hit harmony zone number 2 and just bounce back up. So the speed, I mean, the market is fast on both sides of the market, but rather be long than short. Buying the pullbacks is a better approach. We have a target of 558 as a target. We'll reevaluate that long if we break that 73, 473. Captain set up short right here. Let's see what they want to do with it. Yeah, they're breaking it. Yep. All right, so that's interesting right here. You see this? That's a big deal right here. So they're put a captain, set up short, trapped some longs and shorts, and ran it down, and they did it fast. So the longs came in and picked it up. I get it, but I need to watch for this area because this could be a beginning of a distribution area, and the market can put itself under the 500 and consolidate. The market is in sync on the long side, but the behavior here is something that puts me on the defense. Good morning, Jose. How are you? Good morning. Good morning. Ultimately, our target is 558. $27.37. Yeah, they keep doing that though. Here we go. $27.37. A whole lot of chopping is going on here. And most of the price action in the past 10 minutes or so is just literally middle of the range trading. So the best thing you could do is just trade the edges of price, and they're just pausing right now. So they came and tested 75, ran it up, and now they're consolidating. The market favors the longs, dips getting bought. The top of trader that's getting crushed in this market is the guy that is looking for the turn, and he's looking for a complete reversal. And he's been used for the stops run. That doesn't, unless he has deep pockets, he's getting run over here. If he's just day trading and constantly the market is breaking the highs, he's covering in those breaks. See that again? See these just like they're taking out the stops and just making people think it's gonna get crushed, and they're running the market up. That is a personality. The trader that is looking for break of the prior low and using it to short is getting worked up here. So the environment is long. The type of trader that's making money here is a dip buyer and a trend following trader with patience. Target is 558. We'll reevaluate the longs if we break anything under two prices, the 500 and the 90. That will put us on a pause. You have a lot of patience. 583. Did we hit our target? Yeah, I think we did, didn't we? 583. Our target's 583. It's 87.47. Did this and came back in. That's fast. Market is out of sync. I mean, it doesn't matter which side you're you're on. The market is going to be fast here. Testing harmony zone number 1. 23, 13. Okay, 13. Here comes 13. Stop dump, stop runs, and they're buying. The 500 is going to be the critical level in this rotation, as long as we trade above harmony zone number 2 and above 8,500. That's going to be the critical level for us. The market is out of sync, so you're getting a two-sided market right now. And in order for the market to get out of that zone or that area, you really have to kind of break above the 50. And ultimately the 56, which is the stop for this rotation. Captain set up short here on the 20 NT Renko. So that's the distribution area that we're talking about here. We may end up flushing to the 513 here. Yep. They're gonna flush it to the 13 here. Yeah, see that? And here you go. I mean, they put a captain setup switch trade right here. I mean, that's a clear, obvious sign that the market was heading lower, and typically it's going to come and retest at a minimum, that this part of it, the top end of it. And look what they're doing. They're buying it. They're buying it. I mean, they brought it in to the 500 to the tick. Yeah, it looks like we're. I mean, if we start giving up this 500, you're looking at a 483, and they're gonna defend it along the way. But that's the fate of this price action. I mean, there's some technical damage here. The fact that they bounced off 500, but now they're revisiting that they're gonna flush it right here. And 84, 83 is the area. Here we go. That's the defense right here. They're trying at least. Nope. Okay, so they got it. So that's it. So the market reversed on the 200 NT Rinko. We have harmony zone number one, which is 508 by 518 and 33 by 43. Rallies are shortable on a swing trade basis with a target of 458. 458. We'll reevaluate the shorts if we break anything above 525. Obviously, the 500 is going to be a price that we are going to come up to retest here soon. And that's the typical behavior. We broke the whole number. We're going to come and retest it. And here it comes. And we want to see if we fail that test, which is, it looks like that. But you want to get closer. You want to get closer. Here we go. Yeah, get closer. Here we go. So 09, which we're very close to it, 09, 08. And if you get there, most likely we'll see a bit of a pause. Here it comes. That's your top of trade, Ethan. Right there. I'm sure you're in it. Market is in sync on the short side. And we hit the 08 and never look back. So why the 08? I mean, this is the first touch of harmony zone number one. You typically, that's an observation. The market tends to break the most recent swing high by about 10 to 15 points before it reverses, or at least at a minimum it pauses. So that was literally around the 08, 09. Okay. That's fine. That's fine. So here we go. 10, 12, 22, 24. If you go to 22, 24, 22, 24. Here we go. 24, we should get a pullback right here. Oh no. That's awful. That has a little bit more strength. Okay. Testing harmony zone number 2. That's 22, 24. So 22, 24, we needed to see a one candle reversal here. And then the market tested harmony zone number 2 with a one candle reversal, but there's a lot of buying pressure. And they're about to reverse it exactly like they did before. I mean, the market had a chance to really stick it to the longs and just continue to that bigger target of 458. And shifted. It has a chance here. It had a chance up at harmony zone number 2. That was pretty tough. I mean, the first touch of harmony zone number 1 really kind of went from 5.8 all the way to 475. Okay. So the shorts got trapped again here. Where I expected them to at least perform better, they got trapped. So I need to continue to read the market here. It's 9 o'clock anyway, so 9:02. Let's take a look. Start. Just remember, we have not closed above that 558. That's a reversal. That's a reversal price. They're fading it here too. I mean, the shorts are coming in. I mean, that would be so sick if they get it all the way up here and never look back for the day. And the key is 500. I mean, you break 500, it's all over. Yeah. No, they're coming back. Oh yeah. How did I not see that? Hold on. We're looking at 36.26. Yep. Lower high. Captain set up short at that 36. Man, and they're shoving it to people here. That may be the ultimate trap. This is the ultimate trap right here. Man, oh man. Get that close up there and getting faded. All right, guys, it is. We're going to get aggressive on the short side. Target is 458. 458. $97, 507, 507, 507. Here we go, 505. Good for you. Good for you. You got me on that one. Oh, okay. Market is out of sync. I'll give it a shot. Thank you. So I got short here. I had to cover. I hit my stop, but the market was still short, to be honest with you. So I jumped back in with two contracts. One at that 12, added at 04, and covered at 95. So we recovered our stop. It's just one of those things. I mean, you run in this market without a stop, you're going to get smoked. Then you get stops that look like this, which is really silly. I got to take him, though. I mean, they are literally trapping both sides of this market, left and right and center. If we can get a one candle reversal here, I'm gonna look for a short. Here we go. I may be early in the trade, but we'll see. Here we go. Thank you. I'll take it. I'm taking scalps here. I'm not gonna stick around because we've seen how this price action is working. So we made 8 points off of that trade. I mean, we're hitting harmony zone number 2, and they faded this one into a run up into the high of it. So that whole zone up here is a zone that's shortable, but I need to be patient because we shouldn't be up here, you know, especially after that rally back up and then they slammed it all the way back down and now they rally it back up. I mean, it's just a wide range of choppiness. Question is how is the market treating the stops? On the bigger picture, they're taking what would have been in any type of market as a reversal with multiple candles in the direction of that reversal, something similar to what we saw here, where the market reversed and you had 1, 2, 3, 4 candles in that direction. Reversed here, 1, 2, 3, 4, 5, 2, and they're reversing it immediately. That's just a sign that the market is really strong. So even here, after you ran the stops to the upside and then you reversed, you would expect the market to really, at least at a minimum, come back down to target number 1 at 438 and test the 400, then test the 367. That will be a reversion to the mean type of behavior, but just they're not there yet. I mean, you break the 500. The 500 is the ticket. If you break it and you make a higher low after that break, then we can start looking in that direction. And this market cannot just continue to hit that reversal price of 558 and just not close above it. If they continue to do this, then eventually the weight of this market and this distribution level is gonna take us below 500. But very interesting. Very interesting market, really. Very trappy. See, look at that. Captain set up short right here. So that's distribution against harmony zone number 2, and the market is in the neutral zone between those two zones and just getting chopped up. So that's a market that doesn't know what it's doing. I mean, the market always knows what it's doing, but it's trying to figure out, they're trying to build stops so they can take those stops out So they stay in this range for a while, building those stops. 518, 508. Yeah, reboot your modem and see if that helps, Adam. Choppy sideways inside the neutral zone. We keep hitting the 530, which is the entry point for this swing trade on the 20 NT wrinkle, and the market just simply reacting to it. You don't want to see 541 and a half. Market is out of sync. It's a two-sided market. Like right here, what do I expect? I expect the price to sell off into the 1814 level, because you took out these stops and you're in this distribution zone, so they need to take the stops right under here. Here we go, 18 to 14, right? And better. And better, a lot better actually. 07. Now they should bounce it back. Ooh, that's nasty right here. Yep. That 500. They break that 500. Boy, oh boy. And they know it, and you could tell that they're trying to defend it. It's not like they're... Here comes that break. So like we said earlier, we want to see this break. And if that break happens, we want to see if we can make a rally with a higher low, with a lower high. Excuse me. I mean, here we go. The target for this has remained 458. 458. ES is cooperating. ES is in harmony zone number 2. $458. Boom. Let's go. Done. You're looking at the high of the day, guys. That was the high of the day. And it was a rough way to make a high. It was a rough way. How's everybody shaping up here? Brad, DJ, G Money, Marty, Matthew, Ethan. Next target's 433. Target is hit. Next target 408. Good for them, yeah. Here we go. If that was a retest of the middle of the range, I mean, that was a good spot. Looking for rallies as a shorting opportunity. We have harmony zone number one of 458 by 68 and 83 by 93. I'll reevaluate the shorts if we break anything above 75. Here we go. Let's go here. 54.64. Can I get 64? I mean 64. And then are you serious? I'm gonna take it right here. All right. I'm gonna take it right here. I still like it. Still like it. But it just I'm almost about to say that, 15-point risk in this type of environment that's highly volatile is almost like you're just gonna find yourself getting the average noise in this market is 25 points. That's just average noise, where the market is just simply just not doing anything. When the average noise signal in a normal market that's not highly volatile is 10 points, 8 to 10 points. So we're doubling the amount of noise in this market. So, I mean, I don't want to go to trading micro, but here we go again. What is this? This is 78, 88. Okay, so yeah, I missed that one. But that's resistance right here. Good job, Ethan. 78, 88. Yep, 88. Okay. If you want to know what the sides of consolidation is when the 200 and the 100 are out of sync and the price is trading between harmony zone number 1 and 2. Yeah, 50. Yeah, data seems to be off for some people here, so just be careful. Good job, Rufio. Market is in sync on the short side. We have a target of 408. Rallies are shortable against harmony zone number 1 and 2. So we remember what they've done up here in the 50s, like 550s, and how they visited that place twice. What's different about this one is once they came up to that zone for the first time, they made a high, a lower high, a lower high, a lower high, a lower high, 3, 4 times, 5th, 6 times. So now that tells me something, that the shorts are getting more persistent, the shorts are getting more aggressive, and they're taking the opportunity of any rally to short into. While they were not sure up there at 550, the shorts are more persistent here. Okay? So what type of a trader that has the potential of getting smoked big time? Here, we're gonna have to assume that the dip buyers are still active, because you could still see it. So every time the market dips the most recent low, they come back and buy it. When that stops working, and that's when they're gonna get really crushed, and you're seeing that the distance between the beginning of the flush and the reversal is getting bigger and bigger and bigger. And here we go. Yeah, so those are the top of traders that are getting smoked. If they're still thinking in terms of buying the dip and not adjusting to the mind shift in the market, they're gonna get hurt. So I don't want to be a dip buyer. I want to be short the rallies on confirmed signals. Now we have a target now at 383, and that target is different in the fact that it's the middle of the range. It's a reversion to the mean top of a trade, and the market is gonna defend that. Captain set up short here. That's a decent one. That's 5 points on that. Short. Probably give me a little bit more than just 5 points, but I'm gonna take the scalp version of these trades. You're getting more selling. So what did they do here? That's the beauty of it. When you're reading the stops, they took out the stops right above that captain setup and then reversed. So when they do that, I'm good for a couple of candles at least. Hey, Becca. You doing good today? Let me see here, 52, 62, and then this. Yeah, Becca, we'll get there. We'll get there. That payday is coming your way, Becca. It's coming your way. I know it. Sounds good, G Money. So what is the market doing here? It's in the neutral zone, back and forth, consolidating between harmony zone number 1 and 2. More pressure on the short side. The shorts do not want to see 483. That's the key. And before you get to the 483, I mean, you don't want to go above that 470. Fast market. Fast market. ES, there's a captain setup short on ES right here, in and around 53.35 and a quarter. Market comes up to this high level, 53.37 half, and bringing it back in. So that's just the distribution area that the market just reacting to, and you could see NQ also reacting to it. And every time we look at that range here, from that 58 to the 68, they took out the stops and they shorted it again. Here we go. Now they're taking the lows, and they're gonna, most likely they're gonna flush this a little bit further and bring it back in. Market is in sync on the short side. You're getting this captain setup short. There's two captain setups. Look at that. One here and one here. They're both around that 50. It's a meat grinder right here. It's a meat grinder. $57, $67. Now you make it to see that 83. Here comes that 80. Boom. Yeah. Next target, 533. Are they going to bring it all the way back up? Are they seriously going to do that? That 500 blow, they blew right through that. The 83 was an important level. We shouldn't have. It's not. We shouldn't. We didn't. The shorts needed to protect that with their dear life. I get it. It's a roller coaster. It's a roller coaster. So I mean, the question is, how do we handle it? Who's getting trapped and why? What type of trader is succeeding here? What type of trader is struggling? Yeah. Especially today, Becca. Especially today. I'm just gonna take like a 2 minute break here or so. I gotta look at something different. This market has a target of 558. Harmony zone number one is 508 by 498, and then 83 by 73 is zone number two. We'll reevaluate the longs under 500, and let's see. All right, we're back. We're back. We're back. All right, so what we're seeing here, um, let's take a look at the big picture. A high, a reversal candle, we got tested at the high of that 558 level at least twice, and the market sold off. They're making a lower high, and rallies are shortable against multiple levels at this point. 534.50, you're looking at the 558, that's another spot, and you have the 507. So the market is making what looks like a double top behavior. Okay, that doesn't mean I need to get short anywhere. That means that I need to be looking for rallies as a shorting opportunities on signals, keep my stops reasonable, and keep looking in that direction with the idea of getting to 433 and the 400. Yeah, I know, Adam. It's choppy. Look how the stops are getting handled though. That's the key. If they run the stops, yeah, look at that. They're getting up there and selling off, getting up there and selling off. The market is in sync on the short side, and we're looking for rallies to short into this market with a stop above 81. We should see a bit of a selling pressure coming in here. Target is 433. Yeah. There you go. 440 cover is a good one. That's a good one, Ethan. Good job, bud. All right. Yeah, the direction, Adam, is just the short side. Short side for now. We don't want to see anything above 81. Yeah, it's a whole lot of choppiness. You just gotta adjust to it. We gotta adjust to it. Okay. So where do you want to go? 70 to the 80. Yeah, I mean they're protecting the double top up there, and also whenever the market sells off, they're trying to protect the double bottom that they got going on, and that's why the market is really, just chopping up. So they're going to 81. They're trying at least. There's not a lot of smooth. I mean, there is some smooth moves, but I'd rather be short than long. Reevaluate the shorts if we go above 93. Sorry to hear that, Adam. Yeah, it's markets like this is tough. Slow it down a little bit. Have you thought about just taking it one account at a time or two accounts at a time and stressing them versus just 10 at a time? That'll give you more chances for it to get you to PA. Because you're going to stress them no matter what. But you could manage that risk by just, instead of doing 10 at a time, 2 at a time. So that'll give you 5 chances to get at least 2 across the board, across the finish line. Think about that for a minute. Yeah, but if you're, and that's fine, but you're going to pass a whole lot more than what you're doing right now. So take 10, a set of 10, and just divide them by 5, 2 apiece, and just run it once and see how you feel about it. Okay? The odds are you're going to pass at least one set, maybe 2 sets. And that's less than 50% of the chances. And if you're doing better, you could even pass more. And do another set of 10, another set of 10. You're kamikaze this motherfucker anyway. It's like, I'm sorry. You're going to go kamikaze anyway. So do it 2 at a time. There you go, DJ. Good work. Just an idea, Adam. Explore it, think about it. Yeah, I think a lot of traders put too much stress, too much pressure on themselves by doing 20 accounts at a time to pass the from eval to PA, and then once they get to a PA, 20 accounts at a time. I mean, you could be perfect in everything and still end up blowing those accounts up just because the market was just not cooperating with your signals. So you're just assuming too much risk and too much reward, or a lot of reward when you do 20 at a time or 10 at a time. I think most of us would do better if we just cut them up in pieces. That's my 2 cents in this. Like I have what, 18, let me see here. Okay, here we go. Here comes the PAs. So I had 15 yesterday. Now I have 18. I passed 3 of them later on after the room closed. So I got 3, and I have 2 more coming up. So I'm basically going to be 20 PAs in this thing, right? And what I'm doing is I'm only trying to go for the $150,000 accounts. I'm not gonna go for the 50 anymore, because the 50s you have to be like super careful with your risk, while the 150 will give you $5,000 worth of risk capital, and that gives you a little bit more room, and I like that extra room. Okay, so as I hopefully get paid out of a lot of these, like I have 2 payouts scheduled for those 2 accounts, 13 and 26. I don't know if you can see all of this stuff. 13 and 26, 2600 and 2900, and there you got a bunch of them that are close and bunch of them that need a little bit of work. But I most of the time I take them one at a time, sometimes 2 at a time. I don't do even 5 at a time, or 20 at a time, or 10 at a time. It just, you have risk in, and I understand everybody's different. I'm just sharing my 2 cents and how I do it and why I do it. You have technical issues, and we all experienced Apex technical issues. You have 20 accounts, PAs loaded up. You can't get out of your position, and now you're at the mercy of a reset that may never come your way, or basically you blow all the accounts up and there's no recourse for you. So we experience that. Then we experience markets where it just, whatever system you're using is just not cooperating, and you're taking deep stops, 2-3 stops, and you're halfway into your risk control on those 50,000, and then you're done. So you're better off taking it 1 or 2 at a time and just get aggressive and see how you do, and then taking the second set. So that means I have 10 chances with the 20 accounts. I have 10 chances to get 2 accounts to pay me a minimum of $2,000. The probability is in my favor. I just added probability to my favor here. Anyway, so that's my 2 cents. Well, it's not really much in the big scheme of things, but it's a process. You have to first get the evaluation. So, for example, the evaluation on a $150,000 account right now is $43. So you're paying that. Once you pass it, right now they have this promotion thing, and they are running it at $85, which after taxes you pay $92 to activate the account. So you pay $43, and then you pay $92, so you're under $150. You get yourself a $5,000 risk account, and off you go. So that's the cost. And each account has its own cost profile. If you want to know more, obviously you can ask me, but also you can go on this link right here and get more information. I'm sending it to you, G Money. So click on that link, and it's taking you in there, and there's a FAQ with videos, and from there you can get more information. And I'm sure you're gonna ask, it's gonna trigger some questions, and from there you could ask me, and that's my code as well. If you decide to buy any of them, you could use the Harmony code. All right, while we're talking, price is moving. And we got rejection against Harmony Zone number 1, 83 by 93. And now we're moving to our target of 433. And we're about to close it. We just closed it. Now we got action. We are moving to the next target of 408. Rallies are shortable on a swing trade basis. Harmony Zone number 1 shifted to 58 by 68 and 83 by 93. we'll reevaluate the shorts if we break anything above that 85. Okay, so let's see if we can find ourselves 46, 36, and flush. Okay, so here we go. Hey, David. Morning. Yeah, David, I'm with you. I mean, that's what everybody in the room is saying too, and we've been seeing it choppy, fairly choppy. But at the same time, as when we define it as choppy, and we see in the price spending a lot of time between harmony zone number 1 and 2, that gives us a lot of opportunities, because the first touches of those two zones are an effective way to actually trade a non-trending market. So, so the key here is not the fact it's consolidated or not. Do I recognize it so I could capitalize on it? That's exactly right, Ethan. Like if we recognize the market to be consolidated, and we're still trend trading, you're getting chopped up. Well, that usually never happened, DJ. So that's rhythmic for bull knocks, not rhythmic for apex. Okay, so you're trading the bull knocks, yeah. How are you liking that? Yeah, but aren't you limited to like an amount, like $1,000 a day or something on those $50,000 accounts? Like, what's your maximum drawdown for the account? I gotta look. I'll look that up. Holy crap! Here we go. 408. I mean, none. I mean, how do you blow up an account? Like, what's the criteria? 25 for 50, and there's no daily stop, same as Apex. Boom. Target is hit. Now we're in the middle of the range. Target is 383. Next target 383. 383. Really? I gotta look that up. Boom. Hallelujah. And that's finally. God damn. Woo. Sell them, boys, sell them. Damn. Here you go. Short them, boys, short them. That's what you're dealing with here. Short into target 333. That's where the money's at. Short. $320. Your target is 333. But I mean, you know, it ain't gonna be. It's gonna be one of those things where they're gonna fade it a little bit. Let's see if they can get back up to this harmony zone number one again. Market's gonna bounce back up here into harmony zone number one. So we're seeing the early signs that that's gonna be happening here. So just watch out. We may be getting bounced into harmony zone number one, 83 by 93. It's coming up right now. Market is out of sync, and here we go. My question is that an obligation to trade if you passed? Uh, okay, so you have a PA, you make $2,600. Okay, so you're eligible for a payout. Does the rule say you have to continue to trade, or can you just basically pause and say the market is too volatile, and I'm gonna wait? And if you wait, does that automatically disqualify you from a payout because you waited and not traded an account that you already passed? Because I don't see anything in the rules that says you're obligated to trade once you hit your target. Yeah, so I mean, if some trader that gets to their target on a PA and feels like he needs to continue to trade and end up blowing his account, then it's on him. Yeah. Like I have two accounts that I requested payouts on right here. Those two account well, not those two accounts. Let me see here. Those two accounts here, the 13 and 26. I'm not touching the stuff. I mean, here we go, requesting whatever. I requested it on the first. I'm not touching that account. No evals. What's the name of it, David? Fast track trading. Yeah. You have to be careful though. You have to be careful. Fast track trading. I mean, there's a lot of fly-by funding companies, and I mean, you have to make sure that they actually pay. Anyway, so let's just keep looking here at this market. We got ourselves 503. And you know somebody that actually got paid off of it? So here we go at a whole number, 400, and we hit harmony zone number 2 and came back in. Now we're consolidating again between zone number 1 and 2, and that's the definition of consolidation. When the market is out of sync and you find the price between those two zones, you have the first touch at harmony zone number 2. Now you're coming back to harmony zone number 1 and see how well they hold on to that structure. So if we're looking at it from the perspective of middle of the range right here, I mean, we see how the market flushed it, came back to retest it, and we'll probably most likely spend some time in and around this area. And, act like we're going to break it, come back in and retest it, and spend some time here before either the market gets to 433 or ends up selling off below the 380, and that will trigger more shorts to be more active. Yeah, I'll take a look at it, David. Thank you for sharing that with us. No Ninja Trader? Yeah, that kills it right there. I have to have Ninja Trader. What is this? 03 to 013, and yeah, here we go. Market is in sync on the short side again, looking for rallies as a shorting opportunity. 75, 65. All right, so let's see where we're at for the day. We are at 275 after commission. So a positive day. Let's see if there's a chance where we could get some more. So we have a 41 low, and we're at 55. Let's see if they take out that low. I mean, that's some selling pressure coming in. Continuation trade on the short side. 41 coming up that quick. Boom. See ya. Next target is 308, and they're getting there. Yeah, you didn't want any of that, Adam, did you? You made 21 grand on that short? Are you crazy? What did you do? That's good. There you go. Good job, man. I mean, we're talking through it. I mean, we're talking through that behavior. We're saying, okay, short, 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 short. Good job, bud. Can I share? Well, I mean, you already shared it with everybody, but here we go. Go with your bad self. You're funded. Where did you see that? Okay. You took a couple of punches along the way, but it just good job, man. Yeah, well, sizing when the stuff is working in your direction. Add and add and add. 11 contracts, man. That just it was a beautiful flush. All right, so let's see what else is going on here. So, how's everybody else doing? DJ, where you at? I'm sure you're up money. Good job, G Money. Marty, where's Marty? I didn't hear anything from you. Matthew, any trading? Ethan, you were up earlier. How about you, David? Ampy, where you at? Where's my? Good job, Ethan. That's nice. That's good work, G Money. Good work. Yeah, take some rest, my friend. We'll see you tomorrow. Good job. And I'm out of here as well. I mean, we had a good day. And we're looking for targets, short targets coming up all the way down to 258, but most likely we're going to see a bit of a counter trend coming in here. As long as we don't break 358, this rotation, and we need a price under 308. So that's the combination of prices that needs to happen in order for continuation of the trend to happen. Now this is a bit of a bounce, and we'll see how that bounce holds up. But good work, everybody. And we're out of here. Tomorrow's another day. We'll do this again. Have a good one.